Happy Wednesday, Focus fam. It is Focus Chan. Hope you guys are having a wonderful week and hopefully enjoying the downside this market is providing. As always, guys, want to dive in and in this video, share my thoughts and kind of preface and hopefully help guide you into the rest of the week. So let's get right to work here, as always. So, market guys, been a little bit mad at the Federal Reserve, right? If we just kind of rewind here until back until early January. On the 5th here, guys, we had that FOMC announcement, right? It's always important to understand when the Fed is speaking because the Fed can always dictate what can happen in the overall market. So long story short, last January 5th, right, a few weeks ago, the market got pissed off at Powell, and we've been selling ever since. We had a really, really nice initial drop, guys, right? On 110. We bottomed really nicely at the weekly 21, right? A reversion to the weekly mean. And this is a key level that I really recommend that, we continue to dial in on, because if you look at the overall market, it is not something that, one, we go to very often, but when we do, it becomes a very pivotal level. And again, guys, as a short-term trader like myself, I don't really care, which direction the market is going, whether it's bullish or whether it's bearish. What I care about is understanding inflection points, right? And understanding lines in the sand, and knowing, when to shift, whether it be to bullish or again, whether to shift to bearish. And that is all we want to accomplish as traders, and do our best of keeping our opinion and our bias out of the conversation. So what I mean by that, guys, is this daily 21, this weekly 21, this white line. If you just look here, all of 2021, we didn't revert to it until, mid-September-ish, end of August heading to September. And that was a beautiful reversion. We rallied. Well, for the last few weeks here, every pullback, guys, has been bought up right at that weekly mean, right? We pull back, we kiss the mean, and we pop. However, if we're going to continue to pop but not go higher, that's not a good sign for the market. And again, we pissed off, the market, the Fed did, not me. And we've been going steadily lower since. So to continue here, guys, right, really want to watch this weekly mean, where, one big compass is I want to see where we end up closing the week. Where again, if you just take a look at history repeating itself, we do not close below the weekly mean very often, or, as of recent, not once. All right, we stick our nose underneath, our nose underneath, our nose underneath, and then we get right back out of it and start a decent rally. And again, as this goes all the way back, what was this? This was end of 2022. We kind of kissed the mean and rallied. This was the only time we technically closed underneath it, and the next week was followed up by a huge rip. The only time we truly dumped was COVID. So reason being, guys, is this is a huge line in the sand. And again, whether you're overall bullish or bearish doesn't really matter. It's knowing what to do, whether you're above these lines or below these lines. And as long as the market, guys, is under the weekly mean, we're starting to get very, very vulnerable. So let's continue to kind of work on this on the daily chart. So before we move any further, one thing I need to mention is the Federal Reserve, right? So the Fed did cause a little bit of frustration, as I've said, and that did cause a little bit of a dump here. What's important to know is that the next Federal Reserve meeting, the FOMC announcement, is going to be next Wednesday, right? The 26th. So we need to understand, guys, what are they going to do leading into that? We do have some earnings coming up as well that could change the market, but it really seems like it's focused right now on this one thing, right? And it's just continuing to drive us lower, pop, short every pop type of environment. Does this continue for a week? I don't know. But we do have the Fed next week. This can make it all worse, make it better. Maybe it does nothing. We're going to find out. Another huge inflection point here, guys, that I've been personally focused on is the daily cloud in the overall market. This is another indicator that we do a really good job of when we reach it, we quickly get out of it, right? When we reach it here, we quickly get out of it. We ended up bouncing right at it to end the week there, right? What was that? Sorry, 114. Oh yeah, it's been a short week. I forgot. So, right, to start this week, guys, we ended the week bouncing right at that cloud, and then we fell inside of it, right? And falling inside of it was kind of that first warning. And then the pop here today was just a beautiful short right around that cloud top, right? Right back down. So here's, guys, where it's going to get important. right? Where we really have to step back and kind of reflect on what's going to happen next year. Right now, we're nearing a very pivotal zone, right? We're near that weekly mean, which we tend to bounce at, and we're right at this cloud. And we're also, just for basic technicals, guys, if I get rid of the cloud, we're right back to this huge base from last time. So these are very, very critical levels that truly could shift the market. From here, it could be an awesome dip buy, or it could be where we break and we start to head back down towards that 4,300 range. There's no saying, guys, what could happen, right? Anything's always possible. So, excuse me. I apologize. So again, guys, want to dial in here on a few levels for the rest of the week. And if we take a look, the two most important levels are going to be this key wick here, this 45.20, which is pretty much exactly where we stopped at for today's session. Underneath that, we have that next massive key wick, which is 44.92. And I've pretty much just called this the bottom of the cloud. So this range, guys, right? This is where the market needs to bounce. And again, we have the weekly mean right around this 45.65 vicinity. So if we close underneath it, the market could be in some trouble because as we just looked at, we have not closed beneath that in a long time. And then again, if for some reason we do end up breaking below these key levels, right, taking out these wicks, getting underneath that cloud, that guys can lead to a very bearish market. Right, the sentiment can start to change. And if we take a look at a 2-day chart here, you guys might remember this squeeze from a while ago, right? We still have that 2-day squeeze where we tried to break out of, well, we fell right back inside of it. So, sometimes a good place to look for bounces or, rejections is top of squeezes. So, this entire support here, guys, is going to be very big on the market, where if it does breach, right? Maybe they take us super low heading into Powell. Maybe they bounce it here like they've continued to do. But the reason I wanted to bring up, these inflection points, guys, and as always, start with this conversation is because the market's going to be at a really awesome level here, where if we do break it, man, oh man, could things heat up. And if we do hold it, it could be a decent opportunity to play the upside. But personally, in my opinion, right now, until a few things change, I will be looking to short every pop, right? Every pop this week, guys, the past week or two has been an incredible opportunity to short the market. Today we gap up, short it, pops again, short it. That's the environment until we start to change. So real quick here to wrap up, just want to share a few key levels with you guys again. So if we take a look, 4,600 to 4,606 is the top of the daily cloud. And if the market cannot break through that, we are in trouble. We gapped, below it today, popped near it and could not break it. So we broke below that weekly mean and now we're at that 45.20. So here's the mission that I expect the market to take, right? I'm going to take a quick screenshot here. Hold on. Sorry, I like to use this pen. There we go. So guys, these are the levels that you need to focus on for the rest of the week, where if we do for some reason pop tomorrow, right, or pop into Friday, really want to focus on this 45.65, right? That's the weekly mean. Because remember that weekly chart, we can dip our nose below it, but typically we close above it. So that would assume that we pop the rest of the week and at least get back above this key range. So remember, guys, I'm a short-term trader. I will play this pop, but I will just as quickly switch and short the crap out of it. All right, it's understanding if this, then that. So again, we can pop to the zone tomorrow. And if for some reason we get through it, then I would expect whether it's today, tomorrow, next week, to go and test that 3,600 range. From there, could be another place to load that short. Where again, guys, if we don't break through there, let me just clear up this drawing, right? If we do pop and fail here, it could be a great short. But if we start to break these levels, guys, these are going to be the big ones. We can drop down to the bottom of that key zone. And then if we do break here, right, that 44.92, look at a daily chart. All right, let's just look at some moving averages. We're going to have to go and deal, guys, with the 200-day simple. So like I had mentioned, maybe we don't see the bottom of this range because that would be pretty, extreme. But call it, a 100-point drop from 4,500 to 4,400. which gets you back down to kind of this range here, gets you back down to the 200-day simple. That would be the next path for the market. So going to keep it at that, my friends. We get the reversion to the mean way, way above. That's going to take, a little bit of time. However, what we have in front of us is beautiful. So again, one last drawing, my friends. We are right at the bottom of that cloud. If we can bounce at it, we can go back to the weekly mean. Closing above it would be a decent sign, and it can work its way back to the top of that cloud, which sits around here. If we can't get through and we break, we can go see that 200-day simple, whether it's today, tomorrow, or into next week. And again, I really recommend guys watching those 2-day squeezes, et cetera, et cetera. So ideally, and it all depends what the market has to offer, but I wouldn't mind a pop here to end them, heading into Friday. Maybe we pop on Thursday and then completely get destroyed on Friday. But like anything, guys, if we go down too much, you do want to wait for those pops. But again, even if we're going to bleed every day on the daily, it's something as simple as letting it pop intraday and then getting your short opportunity. So hope this helps, guys. Do we get the pop to the weekly mean, or do we just keep on bleeding? I'll let the market decide. Reason being for the 200, right, is we always want to look at other indexes. And, for technology here, this is going to be a huge compass because, understanding the indexes, guys, they're all doing different things at different times, and they paint a picture. While, right, if I just clear this up, while ES was at HOD, right, a new all-time high a few weeks ago, right, YM was also all the way at HOD, right, NQ was not, and it was the first index to start breaking down, and it's done a really good job of dragging us to the 200. YM is also near the 200. So if these two indexes, guys, right, keep going lower, they breach their 200 and they head to the bottom of their ranges, that is going to send ES to their 200, right? The other indexes do a really good job of setting the tone for what I like to say is possible for the other index, ES, right? If NQ goes to 200 and breaks it, 9 out of 10 times, that's going to lead to ES going to their 200. And then we see what happens from there. So again, to wrap up, guys, on the market here and, kind of move on a little bit, these are huge levels, right? NQ is pretty much below everything you can name. It's below the, daily cloud, below the daily mean, the weekly mean. It's below everything in my system. The last line in the sand for my system is the 200 days simple. If it breaks a 200 days simple, I now focus on weekly clouds, which again, could be in play here, but one step at a time. So again, for the rest of the week, guys, do we get a pop? And the place to look for a pop is the 200 days simple, but it's also a place where if we break it, watch out below. So for tech here, guys, right, we can break the 200 and simply head down to the bottom of that range, where if we can bounce here, we'll see if we can head back up to the daily mean, right? Kind of retest those key levels from prior, see where we go from there. So to show you guys my drawing set, this is what I want to focus on. Let me add these key levels in here. Boom, boom, boom. All righty, so few levels, guys. One is point of control. Point of control has kind of been stepping down with price here. Currently, I'm on the wrong chart. Here we go. Point of control, guys, currently sits above right around 15,605, right? It's basically 15,600. You can call it that. So if we do hold the 200, right, which is right around this 15,000, let me get out my trusty pen here. Always helps the visual just a little easier. So again, guys, we get the 200 here. If we can kind of hold that 200, we can bounce back to this big key level of 15,363. But just like today, if we reject it, it can be a great short opportunity. For some reason, we explode and we do break through here the rest of the week. The most I would expect, guys, would be getting back to that point of control level, which is also getting back to the bottom of the daily cloud, if you're familiar with these indicators. And from here, it could be a great place to short, just like what happened here. But that would be the upside target. And again, if we just continue to break down, which is totally possible, 15K can lead to that 14,710, another nice drop here. So again, guys, gotta just understand key levels and then what the market gives you. For example, if we go lower tomorrow, it might look something like this, where we pop to here and then break down. Maybe we pop all day tomorrow and then sit here into tomorrow, into Friday, and then dump. Really just got to play off level to level and understand, what to do at each. So hopefully this all makes sense. With that being said, guys, main focus is definitely the market. you know, heading into end of week, gonna put a lot of focus on playing, you know, SPY and QQQ up and down off of these levels that we discussed, you know, based on the thesis that we see. But just to give you a few other names here, guys, that I am watching, one of them is Tesla, because I think Tesla's at a really, really big key level here. If we take a look, they are right around that daily cloud. They did a good job of kind of bouncing at it last time, but they're starting to fall out of it. So for Tesla here, they've kind of been range bound, just going back and forth to supply and demand. So much like, you know, technology and the overall market, we're at some really, really big levels that, you know, we very well might bounce at. So I'm open-minded to playing the bounce, but we're also at some key levels that we might fail hard at and could really, really start to flush. So I'm going to pay attention to both scenarios here. All right, all week, guys, Tesla's been a great short at this upper zone, right? You want a short high, buy low. So if the market does pop tomorrow, we do see that relief day. I wouldn't mind playing Tesla off of this zone, looking to play back up into the middle of this range. Nothing too crazy. Vice versa, guys, if it does breach 980, would not be shocked to see 950, right? Tesla has about a 60-point ATR. It's about 40 points away, 50 points away. Pretty reasonable. To the upside here, about, you know, 60 points. We can work our way back to where we've continued to pop and continued to fail. So as long as it's going back and forth here, guys, I like shorting high and buying low. If it breaks here, you can switch sides and continue to short it. I believe Tesla might also be in some squeezes. You know, it has been pretty range bound here. It does have earnings on the way. So again, approaching on a day-to-day basis, but overall, guys, it is a little bit choppy. But again, buying low and short and high is one of the best recipes. So that's all I'll be watching here. By no means a setup that I am obsessed with, but again, we just kind of look at this visual here. If we do hold this key zone, we can look for that pop back up towards the top of the range. If for some reason it gets there and fails, just like it did here, and just like it did here, give you a great short opportunity. Maybe, guys, we open low, we pop, we reject 1,000 and break down to 950. That'll be another scenario that I'll be open-minded to looking for on Tesla. So for the upside here, right, at most would probably look out to 1050. So if we just look at the chain here, the furthest I would probably go, guys, at this point is the 1050 calls. To the downside, the furthest I'd go is probably the 950 calls, puts, excuse me. Would like to see a little bit of a pop before shorting just to make things cheaper, because you don't want to go too far once a move has already happened, because that's a good way to get trapped in the premium. So that's all I'll be watching on Tesla. And then one more here, guys, is Nvidia. You know, this is a name that's just been super, super weak as of recent, in my opinion. It's been trending straight down. And this is one that, you know, looks like a classic example, guys, of potentially, you know, the momentum just building up too much, right? Kind of the weight is the word I'm looking for. And what I mean by that, guys, is the following. You know, if you look at stocks, right, you look at anything, no matter what it is, they're going to be putting in trends, right? And eventually those trends are going to reverse. They're going to give out. So, you know, Nvidia here, they've been trending down nicely, and they kind of had that chance to, you know, base and, you know, reverse through that downside trend line. But as I just mentioned, you know, if a stock doesn't do that, guys, the pressure can start to amount, and it kind of becomes something where, you know, it starts to turn the corner and the pressure just amounts and this thing just free falls, right? That's kind of what Nvidia's been looking like. It's a short the pop type of move right now. And it looks like it might fall off a cliff. Obviously, if tech explodes tomorrow and pops, hey, Nvidia's going to pop. But if we go lower, my friends, this is one that definitely could continue to break down. It already fell through the cloud. It's falling through key moving averages. All right, it's rejecting the mean. Looking like the 200 is possible. So for Nvidia here, guys, right, I want to zone, you know, the top of this range you can focus on. All right, you can also focus on that gap fill there. And then I want to focus on that 200. All right, so call it 220, 230, and literally 240, and it's holding 250. So let's just call it every 10 points here, oddly enough. I've actually seen that happen a lot in Nvidia. So again, guys, right, if we break 250, we can see 240. Break 240, we can see 230. Break that, 220 gets you to the 200-day simple. Obviously, we're running out of time here, but with a 15-point ATR and 2 days left, it's about a 30-point drop. So again, guys, with volatility where it is, if the market actually dumps, these things can be down, you know, 20 points, 30 points in a day. We'll see. If we do bounce, right, if we hold 250, the most I'd expect, guys, would be a pop back towards 260 and 262. So by no means are these, A plus trades. If you're a scalper and you're quick and can buy low and make some cash, that's the way to do it. But again, in this market, guys, at least until things change, I would, if you're not comfortable playing upside, I would let upside happen and then short it until true upside has proven itself. And that's going to happen when we cross some type of line in the sand, whether it's getting back above the mean or whatever it might be. But so for Nvidia, guys, again, if it can, just pop towards this 250 and 255 and not get through it and the market's weak, I like to roll over to 245, 240, right, for kind of the next journey here. And at that point on the options, I'll be keeping an eye, guys, on the 245s to 240 puts. Don't want to go too far out as we end the week here. And again, probably will ignore upside because this thing just looks so bearish. But if it does pop here, guys, the 260s can be decent. Again, very, very quick trading in the, just understand, guys, the pop sets up a better short. All right. Nvidia this morning pops. Who cares? This is the real move, right? This is just setting up. Don't worry about catching pops at the moment, my friends. That's my best advice. So I'll be watching Nvidia. I'll be watching Tesla, and I will be watching the overall market. But remember, guys, one last comment. It is OPEX, so it is option expiration week. We could see some chop into the end of it. Just something to be mindful of. And again, we get the Fed next Wednesday. Maybe the market really wants to kind of nudge Powell. And the reason to, a way to do that might be to continue to drop this market. We're going to have to find out, but all I know is it's volatile, it's beautiful, it's been awesome price action, great key levels, tremendous opportunity. And I hope everyone's feeling the same way. And again, hopefully taking advantage of it. But thanks again, guys. As always, make sure you like, comment, subscribe, drop a comment, and I will talk to y'all in the next video. But happy trading. Appreciate it.
Hey, Focus Chain here with Simpler Trading. Thank you guys so much for watching this video. If you enjoyed it, please make sure you like, comment, subscribe, turn on notifications so you don't miss anything that we do. And if you want to see us trade our money live in real time, go to simplertrading.com and you can sign up for more. But happy trading, guys. Stay focused. I'll talk to you in the next video.